Assalamu alaikum students. Today we will be learn about the indirect method of cash flow statement. First of all, we will be recap about the investing activities and financing activities. The investing activities involve the investments, means we have buy and sell of fixed assets and debt or equities, securities of other entities, means we have make investing of other firms. Other entities means other firms. We have purchased a fixed asset, debt or equity securities of other firms, means the other firms debt, they have a debt or asset, especially the fixed asset we have purchased. These are involved in the investing activities of the firm, means we make our investment for purchasing a fixed asset, for purchasing a equity means shares of other companies, or purchasing a debt means bond of other companies. And the next one is the financing activities. This is also a very important. It shows the cash transaction with shareholders and the borrowing and repaying transactions with lenders. As you know that the financing activities basically change the composition of our firm, changes the composition. The financing activities change the composition of the firm, means that we are repaying to our lenders, means we are repaying to those from we are borrow, so we repay them. In this way our financing means our composition or a size of the firm change. So let's start our indirect method of cash flow statement. First of all, we have write down the name of the company, then we have write down the name of the statement, then the year, whether it is ended on a 31st March, whether it's end on a December, whatever the rule apply by the company for ending their year. So in indirect method, we start from operating activities, then we move forward towards investing activities. After that, we move towards financing activities. We move toward financing activities. Like in direct method, we choose first of all operating activities, then investing, and after at the very last we choose financing activities. Like this, in indirect method we also choose the same method of operating, investing and then financing. But the basic difference between indirect method and direct method is it that in indirect method, when we are writing about the cash flow from operating activities, we are add on the net income and depreciation in all the requirements of a cash flow from operating activities. But in a direct method, the net income and depreciation we have not add down in the start of the operating activities, but in this we have write down it at the start of the operating activities. This is a format for preparing the indirect method of cash flow statement. First of all, you have to write down the net income from your profit and loss account. You have to add on it. After that, you have to add on the depreciation, and then you have to start your operating activities procedures. Cash provided used by current assets and operating related liabilities. Whatever decrease in account receivables. Account receivables means what you have to receive from your debtors. You have to receive whatever you receive, it always been added, means it always been add up, means it is decreased. Why it is decreased? Because it is you received, as you receive your account receivables, it become decreased, and you have to add on in your direct in your cash flow statement, because your cash increase. When you receive your account receivables, means you receive cash, means your account receivable become decrease and you receive the cash, and it will be add on in your cash flow statement. After that, inventories, increase inventories. We are purchase inventory by exchanging cash. When we pay cash, our cash become decrease and inventories increase. How inventories increase when we pay the cash? So cash is goes, we will be minus, we will be less the cash, means the amount on which we purchase the inventory, we will be less this amount. Increase prepaid expenses. When we pay our expenses, definitely we will be less our expenses. After that, tax prepayment. Whenever we pay our taxes, our cash is goes out, we will be less it. And the figures that we have to less all those figures we have to write down in the brackets, whatever we have to less in our other figures. Accounts payable means we have to pay our debtor. Whenever it is increase, means you have to lend. Increase in your accounts payable means you do your lending. When you do your when you do your borrowings, means you borrow. When you borrow, you receive cash, it will be add on in your cash flow statement. Whenever you pay your tax, it will be less, and all the less amount you have to write down in brackets, but you have to add, you have no to write down in the brackets. You have to do all the operation of board mass to these, and then to have write down the sum of all of these sum and minus of these figures from there, means you have to apply the board mass rule on these figures, means that you have to bracket of division, multiplication and addition, and at there you have done only plus and minus, so you have just do from board mass plus and minus of these figures. And the other activities are cash flow from investing activities. When we have to prepare cash flow from investing activities, we have add on our fixed asset, our debt, our equities that we have to purchase or we have to sell out. When we have purchase our fixed asset, means that we have to pay the cash. We have purchased fixed asset by paying our cash, means when we have pay our cash is decreased, so it will be less and it will be show in a bracket. Whatever figure we have to minus, we have to write down in a brackets. Payment of long-term investment. When we have pay, our cash is goes out, so it will be less, so it will be in also in a brackets. So net cash provided or used. When we will be less or add on these, the figure will be shown at there from investing activities. And the last one activities is cash flow from financing activities, means this include your payment to your lenders, and these are increase in short-term borrowings, means you have to do your short-term borrowings. When you receive your amount, whenever you borrow, means that you receive the cash, and when you receive the cash, it will of course will be add down, and whatever you add down, it will without brackets. Addition to long-term borrowings. When you make your long-term borrowings, means you have received the cash and it will also be add down. After that, you have to pay the dividend. It means you pay out from your cash. You pay your dividend from cash, and when cash is pay out, it will be less, and less is shown in a brackets. After that, all of these activities you will be do your net, means you have to done your plus or minus. Net cash provided or used by financing activities. This will be shown at there. After that, the next operation will be increase, decrease in cash, whatever. Whether your cash is increased or decreased, you have to, if it will be increased, then you will be add on it, and you have to write without bracket. But if you make your loss, means your cash is decreased and you have to less it, so you have to write down in a brackets. And after this, you have to write down the opening balance and your closing balance, means whatever your amount at the opening of the year and whatever amount at your closing of the year, you have to write down at there and you have to make this addition of these amounts, and it will be your cash flow statement balance. It will be your cash flow statement balance. In next lecture, I will be provide you a detailed question answer of any case study about the cash flow statement.